CNBC-TV18 India Business Leader Awards 2024. CNBC-TV18 India Business Leader Awards 2024 proudly honors Nita Ambani. India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surbi and Nigel. Guys, hi, good morning.
Hi, morning. Folks. Over the weekend, we had plenty of headlines coming in from global geopolitics, and suddenly Syria is the sort of center of the world for all kinds of reasons once again. But I think the bulls have been fairly optimistic so far in December. We had some great commentary come through from the top business leaders at the India Business Leaders Awards. So I think we're starting the week fairly optimistic.
Well, that's right. And what an event it was, right? On Saturday, 25 years of CNBC TV18, 20 years of IBLA, and the who's who, the topmost voices from industry as well as from market. So a very, very great evening it was.
It was a stellar event, right? I mean, absolutely stellar event. I think we'll play out sound bites and what we got out of that event through the course of the day. So, Ruby, by the way, a little birdie tells me you celebrated your first anniversary as well.
Well, that's 7 December is a very special date. Personal and professional reasons for me. So, yeah.
It's a very, very special day. It's my mother's birthday as well. So, for me, I've been here for 14 years. And for 14 years, I've been celebrating my creator as well as my employer's birthday.
Oh, nice.
I love 7th of December.
Well, those are pictures which are coming through. And I think you've got the star cast. I mean, the winners essentially are all up on the stage. This is, of course, towards the end. I mean, Mr. KP Singh right there at the center, Mrs. Nita Ambani, and all the other winners there as well. Mr. KP Singh, 95 years old. And, I mean, what a guy. Set up DLF from scratch and, of course, absolutely going strong and gave a really rousing speech towards the end after collecting that award. But, I mean, so did everybody else up on the stage in terms of the winners, the pictures that you're seeing. You also, by the way, had a contingent from IIT Madras. CNBC-TV18 ordered IIT Madras as sort of an institution which has enabled so much innovation and sort of startups in the country. Really outstanding event. And as I said, we will get you snippets of that conversation, snippets of what happened there with industry leaders, with the winners and others through the course of the day. Okay, well, let's just turn our attention to the markets to begin the day as we always do, right? So we're coming off very, very strong markets for the last 2 weeks or so. And I think the change will come up on your screen. 3% plus on the Nifty. This is the last fortnight, 2 weeks. The Nifty Bank is up 4.6. The mid-cap index is up almost 7. And the small-cap index is up almost 10%. And this is not low to high. This is close to close. You know, the close 2 Fridays back and the close last Friday. And these are the changes. So remember, this is the backdrop. Very strong gains. In the case of Nifty Bank, we're about 1.5% away from its all-time high. So market's done a fair bit of repair. Now, just to rewind the clock back and take you through where we left off on Wall Street on Friday, U.S. equities ended higher. You had the NASDAQ, which is up about 0.8%. The S&P 500 was up about 0.25% or so. You had, and of course, I mean, the overlay was the US jobs data, which, I mean, in terms of the headline number, etc., there was some nuance, but generally was positive. But there was a higher than expected unemployment rate, which came through. And this is the reason why, the December Fed pricing now is, in a way, locked and loaded, almost locked and loaded for a 25 basis point rate cut. Actually, pre-meeting, if you look at the Fed pricing, market Fed pricing, it was about 16 basis point cut. It moved up to about 22, 23. So it's not 50, at least in December. It is 25 to begin with. Yields across the curve also sold off. So the 10-year, for example, was down about 3.5 odd basis points. The dollar moved back up above the 106 odd levels, but there wasn't very much by way of flow or activity. So we'll have to see. And especially, of course, what's happening with things like the yuan, things like the euro. And these are the bigger constituents which have appreciated in the last 2 weeks or so, and the reason why the dollar was a little subdued. So I think we'll need to see this. Markets, of course, will watch the US CPI. I mean, there is one more set of data, CPI and PPI data, Producer Price and Consumer Price Index. And consensus expects these data points also to be largely sticky and elevated. So shouldn't change the trajectory unless, of course, they're very, very large and different. China's Central Economic Work Conference likely this week sometime. We don't know when, maybe Wednesday and Thursday. And it is possible that they could sort of, announce the much anticipated stimulus package, policy support or whatever. Some sort of policy support is needed, is required. Will they do it, of course, is the question. I'll just tie in the levels here without, they're not very different. The market on Friday had a negative close both on the Nifty and the Nifty Bank. After, of course, the thriller that we had on the previous day, which is on Thursday. Friday was quiet and slightly sideways. Resistance comes in at 25,125 for the Nifty, which is the 50% retracement of the entire fall. And the support comes in at about 24,454, which is the 40-hourly exponential moving average on the downside. These are, again, very near-term sort of levels around where we closed. Nifty Bank, I think there is no two ways about it. On the upside, targets are the all-time high, which is 54,467. Supports, though, come in again at the 40-hourly, which is 52,961. GIFT Nifty will come up on your screen, gives you a quick sense of how we likely to start. It's about 50-odd points lower. Surabhi.
Okay, well, lots to track in terms of those international cues as well as local action over here today. For starters, I think the jobs report is being interpreted as just right, hitting the sweet spot because it's not very strong, it's not very weak. And it gave the market reasons to believe that now the possibility of that 25 basis points rate cut this month, it's increased because before this report came out, the CME Fed Watch tool was pointing towards a 65% kind of probability, but now it's a 85% probability that indeed there will be the 25 basis points that's delivered by the Fed. So that's on the interest rate expectations. But there's, of course, a lot of talk on geopolitics, and that'll keep the market occupied in terms of at least sort of just chatter and track. Now that Syria is center stage right now. But yes, it's a very fast-moving situation, so we'll have to see how that plays out. By the way, speaking of geopolitics, in South Korea as well, there is no clarity. The market's been trading down this morning again because it seems that the president is not going through an impeachment, but it's not clear as to who really is sort of controlling power, and the markets are worried. So that's what's been playing out. Overall, the other talking point in China, like Prashant mentioned, that it is this leadership meeting that's going to happen, where a lot of key economic stakeholders will come together, the economic mandarins, so to speak. This is happening on Wednesday. And ahead of that meeting, the data that's come out of China this morning is not very promising in terms of inflation. What is that data telling us? That producer prices are still in deflationary zone. So producer price inflation has actually fallen again about 2.5% in November. And even at retail level, the retail inflation in China is at about a 5-month low. It's a fairly weak economic print coming through, which is why people will anticipate more measures, more announcements, and some real hard stimulus this time from China. Quickly to come back here. Now, in the recovery process, the Nifty has taken aim at the 100 DMA last week. In fact, on Friday, intraday highs were around this 24,700 mark thereabouts. So let's see if the bulls will, take that out today. The mid-cap market has been on an absolute tear last week as well. Mid-cap and the small-cap indices together were up between 4 and 4.5%. So let's see if we get more of that. The Nifty is about 6% away from the all-time high, but it's the banks that have, taken that bet on and carried that market forward. Will that continue today? That enthusiasm post the CRR rate cut, will that sort of translate into more gains for bank stocks? So we'll watch for that. FPI numbers, very interesting. Now, Friday was negative, but December overall so far is fairly positive. There were net sellers again on Friday to the tune of about 1,800 odd crores. But look at the picture so far. 94,000 crores of selling in October, 22,000 crores of selling in November, but December is already positive, over 24,000 crores. So let's see if we can keep getting some respite from the endless selling. Today, it's a very heavy stock-specific day. I'll just leave you with some sort of flavoring of what's to come. CEAT is acquiring a very critical part of Michelin's business. This is the off-highway, off-track business for about 200 million. So that's in focus. Delta Corp is revising the contours of the demerger of its hospitality and real estate business. So that's a stock that's going to be in focus. Godrej Consumers come out with some very negative commentary. Mid-quarter update on the third quarter, talking about flat volumes, talking about margin pressure. We'll tell you more about it. But watch out for Godrej and the FMCG pack. And last but not the least, Paytm. Now, it's looking to raise some money. And how will it do that? By selling what is known as the stock acquisition rights in a Japanese payment firm. Net-net, it should bring in about 2,300, 2,400 crores into the company. So it looks positive. But a lot of stocks are going to be in focus. So we'll watch for all of that. Nigel.
Well, I would like to watch the cash market flows yet again from the FIs because, they were showing us the money, but they took a bit of a break on Friday and the markets couldn't move up. And I say this because now bulk of their short covering actually has taken place from net short positions at around 1.2 lakh contracts. It's come down to sub 40,000 contracts. So now you'll require to see some cash market buying because majority of that short covering bounce has taken place. So let's see how that goes. In terms of positioning, yes, the FIs, they continue to remain net short, 55% of their positions on the short side, and in absolute terms, close to around 40,000 contracts on the short side. Clients, they remain net long. The net long positioning is at around 1.05 lakh contracts or thereabouts. And also you have it in percentage terms at around 59%. Moving to the options data then, two strikes are fairly active, 25,000 call, which seems to be a bit of a resistance zone on the upside. So the 25,000 call was active. On the downside, the 24,700 put was active as well. Premium at around 200 rupees. So going by that put, 24,700 put being active, the 50 DMA as well is in this vicinity of around 24,550. Options data, 50 DMA suggests that this 24,500 mark becomes the first reference point on the downside. Last week's high of around 24,900. That's a bit of a resistance zone, but to round it off, it'll be around 25,000 odd on the Nifty. The Nifty Bank, well, you should see some kind of support coming in at around 53,000 odd. While the recent highs closer to around 53,900, 54,000, that becomes a bit of a resistance zone. Today, I'm going to give you, the stock to track as well as, the sector to track. So in terms of stock to track, Senco Gold, that's the stock that I'm looking at. It ended mildly above the 20 DMA in Friday's trading session. And also keep in mind that the stock from the recent peak has corrected close to around 25%. However, it ended quite strong in Friday's trading session and there was delivery-based buying that we saw. So the delivery quantity on the NSE was more than 4 lakh, shares. And in comparison to that, normally it's sub 1 lakh. So Senco Gold is a stock that I'll be watching for the next few trading sessions. That's point number one. Point number two is, Godrej Consumer has come out with their release and they've come out with it ahead of the end of the quarter as well. And they're sounding a little bit skittish. So it could add to some kind of nervousness on the FMCG pack. Keep in mind, we had HUL and Colgate, both of them had their investor meet and both of them stopped short of giving any kind of confidence with regard to the recovery on ground, which could add to some kind of nervousness on the FMCG pack. So we'll keep an eye on the stock, keep an eye on the pack. Senco Gold in terms of stock in focus and in terms of sector in focus should be the FMCG pack.
Okay, absolutely. With you on that completely, Nigel. Watch out for how some of the other FMCG names react as well. So let's get started with the equity call of the morning. Lawrence Belanco of CLSA says last week's break above the 50 DMA reinforced the original breakout from October-December basing pattern. He says this action reinforces the idea that the correction of the September highs has bottomed and provides an initial upside target of 25,754 with the next chart resistance provided by the late September highs at 26,134. Interestingly, he adds the NSE Small Cap Index led the India market higher last week with its break above the 50 DMA. Lawrence says the NSE Mid Cap Index too has broken above its 50 DMA with relative price action on the cusp of a breakout to new all-time highs.
Okay, well, that's an important sort of technical view, which is widely watched by the market. Let's quickly tell you what the corporate interactions are, which are lined up here over the next 2.5 hours or so. 8:30 this morning, we have Prakash Devan joining us for some fundamental stock analysis. At 9 o'clock, we'll be joined by Pranav from Bernstein, and we discuss the banking and the MFI space. 9:20, Tahir Badshaw of Invesco Mutual Fund will join in for markets. 9:30 a.m., the management of CEAT. They've signed sort of an agreement to acquire a company Following that, Sanjay Rudra of Union Bank will be speaking with us on their H2 outlook. 9:50, Tata Power joins us and they outline their F530 targets. And of course, towards the end of the show, it's our segment, it's the economy. Latha will be in conversation with Timothy Moore of Goldman Sachs and talk about outlook for the Indian market in 2025.
Well, we're slipping to a short break, but we've got a lot of stock-specific action to track for you. We get to that in just a bit on the other side. But for the time being, I'll run you through the list. CEAT, Paytm, JSW Energy, Suven Pharma, Lotus Labs, all of them will be reacting to positive news flow. Add to the list, Welspun Corp as well will be reacting to positive news flow. On the flip side, Divi's, Piramal Pharma, Syngene, Godrej Consumer will be reacting to negative news flow. Slip into that snappy break, come back. We'll get into further detail on all of these names.
The Lifetime Achievement Award that pays tribute to an exceptional journey of purpose and progress.
Well, many congratulations to Dr. Cyrus Poonawalla and a big round of applause for him, ladies and gentlemen. The founder of Serum Institute of India, Dr. Poonawalla, has been a cornerstone of vaccine innovation for more than 5 decades, making affordable vaccines accessible worldwide, protecting millions from diseases. Let's put our hands together for Dr. Poonawalla.
Welcome back here with us on Bazaar Morning Call, and it's time to talk about a lot of the stocks that are going to be in focus today. It's a long list, and our team is standing by with the CNBC TV18 list of top stocks to watch. Guys, good morning to all of you. Vinny, lots of news on pharma coming through, including the US Biosecure Act. So run us through.
Absolutely. So an important update that is coming from the Biosecure Act side. Now, they were supposed to take this into the defense bill, which took place over the weekend. That didn't happen, and it was left out of this defense bill. So sentimentally negative is what is coming in as a move for the Indian pharma stocks and CDMO stocks, especially. So something like a Divi's Lab, Piramal, Newland, Syngene, Suven, all these will be in focus, and maybe could see some bit of a decline today. And this was one of the first few and the best chances that they could have placed this Biosecure Act into this bill. Now, obviously, if this doesn't happen as of now, then there will be a delay, and they're hoping that this actually happens this year. There's one more chance that they can apply for this, will be in the bill with the funding packaging legislation. So that is what we're keeping an eye out on. If it doesn't happen during this year, then there'll be a whole new process that starts next year for this bill to be passed, and that is going to be some bit of a delay for the business coming in for CDMO business companies in India, and that is why we're expecting a red coming in on these stocks today.
Okay, all right. Thanks a lot for that, Vinny. We'll keep an eye out on those names. Well, let's hop across to Sudarshan, who's here to tell us about CEAT. Morning, Sudarshan. They've gone ahead and made an interesting acquisition.
Morning, Daniel. So CEAT has announced an acquisition of Camso brand from Michelin Groups. So it does two things. First, it helps CEAT expand its off-highway tire business. And second, it gives an access to a superior technology business, that is Trax business. And deal is expected to be completed in 6 to 9 months. It's an all-cash deal, and the value is $225 million, which is 15% of CEAT's market capitalization. And debt-to-equity ratio for CEAT, which currently stands at 0.4 times, is expected to increase to 0.7 times. That also would be in the range of comfortable level that company has been talking about. Talking about Camso brand, it's a brand in construction equipment, tire and tracks with major markets in Europe and North America. And as of CY23, the brand's revenue was $213 million. So overall, it's a good acquisition made by CEAT.
Well, and Basud, thank you very much for that. As I said earlier, we'll have the management, Anand Goenka of CEAT, join us at 9:30 this morning to talk about this particular acquisition. Let's move on. And this is from the fintech space. Paytm should be in focus. Abhishek is here to tell us why. Abhishek, morning.
Morning, Prashant. So Paytm has issued a clarification with respect to a report stating that Paytm to sell stake in Japan's PayPay to SoftBank for a consideration of $250 million. So Paytm says that the board of ARM, that is 197 Communications Singapore, has approved sale of SaaS to SaaS in PayPay Corporation Japan. So SaaS is nothing but stock acquisition rights. This will be done for a consideration of rupees 2,364 crores, which is slightly higher than what the news report did mention. A transaction will be completed in December of 2024, and this transaction will increase the consolidated cash balance of Paytm. Back to you.
Okay, all right, got that. Thank you very much, Abhishek, for it. Back to Sudarshan then, who's watching out for Godrej Consumer as well as JSW Energy. Sudarshan?
So talking first about Godrej Consumers apart, so by the first look, it's not looking a good update that company has given in the mid of the quarter 3. Still, like, we have 20 days to go for the quarter 3, but it has given the update. And by the first look, it's not looking good. Apart from Godrej Consumer, it might have an impact on other FMCG stocks. So what does company says? It's expecting a flat volumes and mid-single-digit sales growth for quarter 3. So portfolio is likely to be impacted by first, price hikes, second, grammage reductions due to 20 to 30% surge in palm oil prices that company has seen, and home insecticide portfolio is likely to be impacted by delayed winter in North India, and also overall demand conditions, company is saying it has been subdued, and there's a sharp decline margin, which is due to first, unusual high base, and second is current inflation, competition and investment. So overall, it's not a good update for Q3 that given by Godrej Consumer. Second stock is JSW Energy. I'm going with green. Company has announced that JSW Energy Utkal has executed development and production agreement for Batep coal mine in Odisha, and its company was the successful bidder for this mine. And second news is JSW Neo Energy has bagged letter award for NTPC to set up a 400 megawatt solar power project.
Okay, all right. Thanks a lot, Sudarshan, for running us through all of those stocks. But let's go back to Vinny. She's here to tell us about Suven Pharma as well as Laurus Labs. Vinny, take it away.
Good morning. So, yeah, both these also on focus. Suven Pharma, why? Now, they've signed an agreement that is with NJ Bio Inc. and they plan to invest $64.4 million for 56% stake in this company. What does this mean for the company and Suven Pharma? One, it becomes EPS accretive for them in 2 years. It will expand the addressable market that they have for ADC CDMO from around $200 million currently to $1.4 billion. So, for the long term, it's a positive that comes in for Suven Pharma after tying up with NJ Bio Inc. And that is why we're expecting a green here. Laurus Labs, also we're expecting a positive move today after its subsidiary. Laurus Labs is going to be investing in its subsidiary, Laurus Bio, around $120 million 120 crore rupees, I beg your pardon, which will be an equity investment they're making from Rights Road Ventures and F Prime Capital. Now, Laurus Labs will co-invest around 40 crores in this deal, and promoters will be issued share warrants here. So the investment will expand its fermentation-based manufacturing capacity for its subsidiary, that's Laurus Bio. So keeping an eye out on Laurus Labs as well.
All right, thanks a lot for that, Vinny. Well, Welspun Corp is a stock that I'm tracking, and the reason is in the last, couple of quarters, the US business hasn't been firing. But what's happened in quarter 3 is they've gradually started getting orders, and they've won yet another order building onto the earlier 2 orders that we saw in October as well as November. So as per the release, they won orders for pipes, and this will be with regard to the natural gas pipeline projects. The total order wins for quarter 3 so far is around 7,000 crores. Just to derive it, it appears that earlier it was around 3,700 crores. So this one should be around 3,300 crores or thereabouts, which will be executed towards the fourth quarter as well as for FY26. Their commentary as well is very, very strong. They're saying in a good position to bag more orders. The environment out there is very, very positive. And, Mr. Trump is talking about drill, baby, drill. Well, he'll require pipes. That's why this company is well placed. And also they have their facility in the United States. So the stock is closer to the 52-week high. Expect the stock to open up in the green. And later today, we'll try to get in the management at around 10:30 a.m. here on CNBC TV18 as well. So those are all the top stocks that we're tracking. Let's run you through the list yet again. Let's do a quick refresh. We have CEAT, Paytm, JSW Energy, Suven Pharma, Laurus Labs, and Welspun Corp. All of them will be reacting to positive news flow. On the negative side, Divi's, Piramal Pharma, Syngene, and Godrej Consumer will be the stocks could open up in the red. Slip into that short break. We come back. We'll have Prakash Diwan who will be joining in for some fundamental analysis on all of these names.
The next category, outstanding contribution to public service, honors such a legacy. This year's award goes to someone whose tireless efforts have inspired change and action worldwide. Ladies and gentlemen, a huge round of applause for our winner, Ms. Sunita Narain. Congratulations, ma'am.
Let's give her a big round of applause, ladies and gentlemen.
Welcome back. You're tuned in to Bazaar Morning Call and hope you're having a good Monday morning. Well, we've got plenty of stocks that we need to analyze. We just listed down all the news points for you. Let's get in some more fundamental analysis. Prakash Diwan joins us to help us out with just that. Hi, Prakash. Good morning and good to see you in as always. Prakash, tell us what's the view on CEAT? They've gone ahead. They've done some inorganic growth. $220 million is what they're paying. Roughly, I think, on an EV upon sales, it's around 1.1 times. What's your view on the stock?
Yeah, good morning, Nigel. So I think first and foremost, let me talk about this acquisition and then we'll talk about the general health of the business. I think this definitely makes a lot of eminent sense for them to move into a segment that probably is what they will need to expand beyond the conventional place that they are in. This is a good acquisition. I don't think they're overpaying. It's extremely difficult to develop and bring yourself to that kind of a stage where, in terms of the burn that you would have to. And Camso is, probably giving them what helps CEAT compete with a lot of the other off-roading, areas. See, what's likely to happen for most tire companies is that the rubber pricing that we saw at the beginning of this financial year was a bit firm. That's kind of softening towards the end of this year, and maybe calendar 25 is even softer. So all the issues that they faced in terms of the raw material volatility, that could probably be put to rest. And their ability to grow into these newer segments that have started growing. For example, the Thar comes with a CEAT relationship, and you could have more of these on the electric vehicle side, also expanding into those segments which are likely to be high growth areas. So I think they have their act together. The balance sheet's pretty healthy. It's just a matter of whether you want to allocate money to a CEAT or a JK or any of those that you choose within the tire space. But I think the space definitely looks quite promising for the times coming ahead.
Okay. So CEAT is going to be in focus as well. Prakash, hi, good morning. Let me take you back to where you are from, right? Goa, because we've got news from one of the companies over there, Delta. Now, they announced, I think, late on Friday that there's a slight revision in that demerger plan. And the company's sort of faced a lot. It's been quite a year for them. Now they're demerging the real estate and the hospitality business. But I think one of the major properties that they're coming up with, that will be separately demerged into a subsidiary of this new company. What do you think of it? Because there's been a lot of choppiness and value destruction in Delta Corp. Any sense in looking at the stock?
Yeah.
Yeah.
Absolutely no way. Can you hear me?
Yeah, slightly sticky line, but go on. We can hear you.
I don't. Phase where there's too much of that GST overhang that just refuses to go away, and even the competitive intensity in that space is not the same what Delta had. In fact, that's the only company in the listed space. That's why we talk about it. But there are 7 other players right next to them which compete for market share or whatever footfalls and all. So for them to be able to leverage some of these assets that they have, which may not have the regulatory overhang, is a very wise thing to do. So I think it's a smart move. They'll probably be able to get themselves to not just diversify, but de-risk themselves completely out of that regulatory overhang. So it's positive, but we'll have to wait for the timelines, the kind of allocations that they decide to make, and who's going to be backing them up in terms of managing this real estate assets, in terms of hospitality partners, and also there's still some time, but I would believe it's a very, very positive step. So the disappointment that you've seen on the counter could probably be coming to an end.
No, I guess Nigel and Prakash are going to be adding to the business. You're going to hit Prakash up, right? I remember on Friday.
Yeah, but no Delta.
Okay.
All right, well, let's just get you some highlights from the CNBC-TV18 20th India Business Leader Awards as well. Union Ministers Nitin Gadkari spoke about making fuel-efficient vehicles and about logistics costs and assures that the costs will come down to single digits, about 9%. Listen in.
The cost of a petrol diesel vehicle and an electric vehicle will be same. And that is the reason today we have 400% rise. In some of the models, there is a waiting list now. And because if you are spending 120 rupees of petrol for the same distance, for electric the cost is 15 rupees. The size of the fossil fuel economy is so big Whatever the initiative we are taking for ethanol, methanol, biodiesel, LNG, CNG, electric, hydrogen, I got a hydrogen car. The name of the car is Mirai.
You've been driving that for a while.
Yes, the car is driving by the driver. I don't want to take it. But
You've been driven in it for a while.
actually, hydrogen is the future. And the green hydrogen is the future. Today, the logistic cost in India is 16%, 14 to 16%.
Yes.
China, it is 8%. And in European country and USA, the cost is 12%. And now, because of express highway, now Delhi to Mumbai, up to Baroda, it is already completed. 60% work to JNPT also completed. So it will be 12 hours from Delhi to Mumbai, 2 hours from Chennai to Bangalore. It's just end of December, before December we start that project. Yeah. Then Dehradun to Delhi, 2 hours. Delhi to Jaipur, 2 hours. Delhi to Amritsar, 4 hours. So by which we will reduce the logistic cost as far as the speed is concerned. And the other important thing is, in place of diesel, if they are going to use CNG, LNG, or even any alternative fuel, or electric trucks are now coming to the market. So that is going to reduce the logistic cost. And I'm sure that within 2 to 3 years, our logistic cost will be 9%, single digit.
All right, so that's Mr. Gadkari talking about more road connectivity and something that would, of course, drive down costs as well. Now, we also had Mr. Devendra Fadnavis, the newly elected Chief Minister for Maharashtra, at that glittering ceremony. He wooed investors at the CNBC-TV18 India Business Leader Awards, making his first media appearance after being elected CM of the state for the third time. He said that Maharashtra can be a $1 trillion economy.
There is huge opportunity to invest in Maharashtra, to conduct your business, and I would like to assure you that conducting business will be the most hassle-free activity in Maharashtra in days to come. We are there to handhold, we are there to partner, we are there to share everything which you want us to share. And I'm sure that with all the business leaders who are sitting here, together we can make Maharashtra the first $1 trillion subnational economy of India.
Well, and Mr. Rajiv Bajaj, the managing director of Bajaj Auto at the CNBC-TV18 India Business Leader Award, said, according to the December data, Bajaj Electric Chetak scooter is the largest selling scooter in India. Let's listen in.
Based on December Vahan registration data, our electric scooter, the Chetak, is now the largest selling, not the third largest, the largest selling electric scooter in the country. So your award could not be better timed. And the message to me is, Ola to Ola hai, lekin Chetak to Shola hai. So, I just close by saying that it was Ralph Nader who said, I want the guys who love to win. And if I can't have them, I want the guys that hate to lose. I am so fortunate. I have 10,000 guys who either love to win or hate to lose. I thank God for them.
Well, trust Mr. Rajiv Bajaj to come up with a memorable line. And I think we're all going to be talking about that one line. And it's going to be etched in everyone's memories. Because, of course, in the marketplace, there is a fight which is going on. And he's kind of framed it in the way that he wanted to. And, of course, the other one, which is Mr. Fadnavis speaking with Network 18's Rahul Joshi, newly minted chief minister, lots of anticipation about what it means for Maharashtra, and saying that he'd like the state of Maharashtra to be the first $1 trillion economy. I think tall ambitions. There was also that conversation about investments moving to Gujarat and what he'd like to see, etc. We'll play more of that out as we go along. Prakash, of course, is still with us. Prakash, good morning. Prashant here. Apart from all of this, Godrej Consumer put out a mid-quarter update. We covered that in part of Top 10. Does it look good? It just essentially still means that third quarter, at least from a consumer side, is just one company. But I don't know if this has got implications beyond just Godrej Consumer stock.
Good morning, Prashant. No, I do agree. It's like a red flag. It's never very great to hear this kind of commentary from a large FMCG player. But Godrej Consumer, thankfully, is just in the Indian markets, is a niche player in some of the categories, probably a broader player in some of the other categories where volumes probably would have shrunk a bit. But it's not, to my understanding, a complete proxy of the rural consumption pattern that you would want to see emerge. From that perspective, you would have to give it the benefit of doubt, and let's see if a Dabur comes up with something, which is or an Imami tells you a similar thing, then it's something you need to take serious note of. But my sense is this is all from the recent past. What is expected to change is probably going forward, the quarter that's coming, Jan, Feb, March, could be better. Of course, we keep getting optimistically excited about things ahead, but the numbers that we are seeing in consumption from most of the discretionary spends haven't got impacted. It's the staples that are the ones that are getting impacted. So you'll have to pick and choose the companies that you want to be out of or you want to be in. But I would believe FMCG still got 3-4 months to consolidate, to prove itself that things are looking up. So I do agree. It's a little bit of a caution, but I wouldn't let it set alarm bells ringing just by this particular thing. But yeah, as I said, you'd made to allocate money before some revival happens.
Okay, all right. Prakash, what about Welspun Corp? You had given us this idea, I think, 20 days or 15 days ago. The stock has done well from there, and now the anticipated order, that the street was sniffing has come about. 7,000 crores of order wins in a single quarter, that too in the United States, which actually has been a drag in FY25 so far. The stock, however, is closer to around 800 rupees. What's your view on it?
So absolutely, Nigel. You look at how traction is coming back. I mean, 3,500 crores was the order book till Q2, and certainly this quarter you have that doubling. And I think it's just the start, because the gas pipeline network that is likely to start getting rebuilt, the shale gas network, there's no way they can't keep buying pipes. And fortunately, they've had the unit out there in the US, the facility is there, so it's not even something which could get impacted by tariffs in a very significant way unless the demand outstrips the capacity of that local unit. But I think the company is poised to do well. There's no reason why. And remember, if Ukraine-Russia stops in some sort of thing or takes a pause, or even the Middle East crisis, there will be a rebuilding of a lot of these networks, the pipeline networks and supply chains. So there's always enough opportunity even beyond the US, remember. So I think it's just the beginning of a very good virtuous cycle. The stock's pretty well placed. We spoke about it just at about 700, under $700, but it's just done 10% from there. But my sense is there will be lots more that could kind of add up as the order flow improves and gets stronger.
Okay, so Welspun Corp also a stock to watch. Prakash, what's the trade for this week? Do you see anything straight up? I mean, last week it was banks, right? And there was this big anticipation ahead of the policy, and everybody said there'll be a CRR card, so banks were being bid up, and that was delivered. Now, we don't know if that juice is still left in the banking pack. That was in part a large reason why the Nifty also moved higher, right? Do you see some clear trade for this week?
No, so
this week and beyond.
No, I'm just saying the banks might continue to do well, especially the smaller banks will participate rather than just the larger ones that have contributed to the indices. But the trade going forward is going to be, IT will make a comeback sometime early Jan. So if you really want to do something in anticipation, you would have to look at that, Sagility and those kind of stocks which have recently got listed but haven't yet, got celebrated in that sense, because, people haven't yet mastered or understood the business model completely. And the other thing, this would be the pocket that you could look at is, it's green hydrogen. I mean, there is very clear indication that end of this financial year, you'll probably have some of the largest outputs starting to rev up and begin commercialization. So, Reliance is the new energy vertical is one of the things that I'm referring to. I would look at Reliance towards the end of this year and early next year to participate in the in this rally or whatever Santa rally that you're talking about. There could be some sort of a move up there. For traders, it's a very good bet. Of course, from a longer term perspective, also it fits in. So even if you are left with holding the stock for a longer period of time, you are absolutely going to be in good hands. So I think Reliance is something which you would look at along with some of the other infra names.
All right, what we're going to do is, Prakash, stay with us. We'll take a quick commercial break here. We'll come back. More questions, Prakash, coming your way. with specific stocks, etc. But we'll also have some technical trading ideas. So Mitesh and Sudarshan join us for that. So stay with us. There's about 14 minutes to go for the pre-open session.
The next award is a special recognition for outstanding contribution to the Indian economy, which recognizes an extraordinary force behind India's growth.
Ladies and gentlemen, a round of applause for Professor Mahesh Panchagnulla, Department of Applied Mechanics and Biomedical Engineering, Dean Emeritus, IIT Madras Head, Center of Excellence on Sports, Science and Analytics, and Professor Satya Narayana Chakravarti, Department of Aerospace Engineering, Head, National Center for Combustion Research and Development, and co-founder of several startups.
Welcome back. You're tuned into Bazaar Morning Call. As promised, let's get in our technical experts. We have Mitesh as well as Sudarshan who join us on the show. Good morning, gentlemen, and thanks a lot for joining in. Well, Sudarshan, you go first. The GIFT Nifty suggesting we pull back by 50 points or thereabouts. What's your view? Would you be looking to buy into a bit of a dip today?
Yeah, good morning. See, the markets had a very handsome rally in the last few days. Now, after any kind of a rally, it is good that the markets will pause or consolidate, catch their breath, so as to say. So if the market is going through a subdued phase, that's fine. There's nothing wrong. And the trend, the uptrend is intact. We had a very narrow range on Friday. Now this narrow range could actually lead to a smaller dip today also, and we should be prepared for that. So for the short-term trader, the trade is not to rush into the Nifty today. If you get a dip towards 24,500, that would be a buying opportunity. And it is quite possible that after a morning weakness, the dip may not come at all. In that case, a second trade comes if the market breaks out above 24,750. So there is a no trade zone between, say, 500, 550 and 750. Let the market chop around there, either by the dip or by the breakout.
Okay, all right. Got that, Sudarshan. Mitesh, good morning. So what's the call? What's the trade?
Good morning, Survi. My understanding is that over the last few days, the Nifty range has shifted on the upside. 24,500 to about 24,800 being the counters for me. And therefore, I think, I would be more inclined towards deploying range buying strategy, which means that closer to 24,500, 540 zones, I would want to explore long opportunities on the index. So the idea is that my bias is on the positive side, but I think 24,800 might be a difficult level to get past in the first go. Hence, there could be some consolidation, and buying on declines is what I would recommend.
Gentlemen, morning. Good to have both of you here. Sudarshan, what would your specific trades be?
Well, it's again an all buy list. See how Prashant, the mid caps, the smaller large caps. I don't know how that means smaller large caps, but anyway, they're all coming out of their corrections, building small bases and breaking out. That's the pattern in all the stocks I'm discussing, all the 4 stocks. NMDC is a buy with a stop under 230. Tata Power is a buying opportunity, same pattern, dip, consolidation, imminent breakout with a stop under 430. Tata Steel is a buy with a stop under 145. And Zydus Life is a buying opportunity with a stop under 970. This is a seasonally bullish market period. Traders should be well advised to avoid any short positions.
Okay. Mitesh, let's get to your stocks as well.
So I have 3 buys to a sell. On the buying side is Axis Bank on a decline around 1175, 1176, buy with a stop at 1164. Look for a target of 1210. A buy on LNT around 3850 with a stop at 3820 for a first target of 3930. A buy on Scient with a stop at 1950 for targets of 2100, and one sell call, that's Canfin Home Finance. Keep a stop at about 816 half, 817. Look for a target of 770.
Okay. All right. Got it. Thank you, gentlemen. We'll come back to you a little closer to market opening for some more thoughts and ideas. Right now, we do have to take a very quick break. We'll come back. We'll have the pre-opening rates. And also, we'll be in conversation with Pranav Gundapalli of Bernstein. We'll put the spotlight on the banking sector after the RBI policy.
The Outstanding Business Leader of the Year. This year, the award goes to the one who has redefined success with unwavering vision and determination. Requesting Mr. Vellayan Subbiah, Executive Vice Chairman, Tube Investments India, and Chairman and Non-Executive Director, Chola Mandalam Investment and Finance, to join us on stage to accept the honor.
A big round of applause for Mr. Subbiah and many, many congratulations in winning this award. Mr. Subbiah, you've truly raised the bar for leadership, and we'd love to hear your thoughts.
Welcome back. Closing in on 9 a.m., 16 minutes to go before trade kicks off. And it's actually going to be all eyes on the RBI as well as actually North Block to figure out what is happening with the RBI governor appointment. The government is expected to announce the name of the new RBI governor or perhaps an extension to the current governor, Governor Das. We have Lata joining in with more perspective on this, something that the market is eagerly awaiting, Lata.
Yes, the buzz has been up and about for a month now, and it heightened in the weekend because the governor visited Delhi. We were told, our sources told us that he was called to Delhi. Now, this could be giving him an extension. It could be simply a courtesy call, thanking him for good work done. We don't know that. We don't know what transpired, but we knew he was in Delhi. Now, we can only look at the history. In the past, extensions of governors has always come well in advance. For instance, Bimal Jalan was told that he's extended like 4 months in advance. Subbarao was told a month in advance. Governor Das himself got an extension, for 3 years ago in 21, and he was told several weeks in advance. So that is one way of looking at it. If it didn't come, then is it not an extension? Now, there's also Governor Das has served for a very long time. He is second highest in terms of length of service. The only one higher than him is Governor Benegal Rama Rao, who served for 7.5 years in the 50s. Next to him comes Das with a full 6 years. Bimal Jalan also got 6 years, but he didn't want to complete. He asked for an early commuting of his term. And previously also, R.N. Malhotra got an extension, but he truncated it and left. Now, therefore, there are all these thoughts going in. Already served a very long time. You don't want to be too dependent on one person. That kind of interpretation, but all by people who are not really having the power to appoint itself. The inordinate delay, of course, is puzzling everyone. But here again, the interpretation is if it is not an extension, then you don't want him to go and make an RBI policy and meet the press, say that I'm going to ensure that inflation is at this level in a year from now, growth is at this level, when, people think, Arey, but you're not going to be around. So maybe that's the reason why it was not told before the policy, and the announcement, was kept for after the policy. But in any case, these are the other names doing the rounds. All of this is just buzz. We have no, definite news. But all these people were seen as in the running. DEA Secretary Ajay Seth, CE Anand Nageshwaran, and one of the RBI DGs himself were seen as the names being parlayed. I'll tell you one thing. Governor's appointment comes from the Prime Minister. It has always been like that. You don't have committees. It's too serious an appointment. Just as the Finance Minister is appointed just by the Prime Minister, you don't call a committee for it. Likewise, the Governor's appointment is a serious one, and it's done by the Prime Minister. So anyone, all tongues wagging, are just their own opinions.
All right, Lata, thank you very much for that very, very interesting sort of, perspective, context really, in which you should view this. And we'll, of course, track the announcement and cover this extensively as and when it sort of comes through. Prakash, of course, is still with us. I think we are 2 minutes into the pre-open session. Prakash, thank you for waiting. On Friday, you had these auto names all which went up sharply. Tata Motors, Bajaj, Maruti were the 3 top gainers on the Nifty. So I don't know if you have a quick thought on that. And then coming on these smaller power names, which had a field day. HBL Power was up sharply. There was, of course, it's a battery / coverage orders, etc. HPL Electric smart meters. Voltamp was up sharply. Go on.
So Prashant, let me take this power cluster out of the way. I think HBL Power, of course, was in anticipation of order rolling out to them as well after what's come through Carnex. But it's more a one-off at this point in time. But what's interesting is in the power value chain, beyond the transformers, there's a host of smaller equipment suppliers who are kind of smartening up. One is, of course, the secure meters growth that we are talking about. Of course, implementation is a challenge. But the global setup for anybody who's willing to export, who's capable of exporting, and I'm going back to some of the well-known names like Silchar and TRIL, APAR, there is so much of demand globally for power transmission, not just generation, that their order book for the next 2.5-3 years is absolutely strongly built. But don't ignore the bigger ones out there, Tata Power and Torrent, for various other reasons in that value chain. So this is expected to do well, but then valuations is something that you need to be comfortable with. But on the auto side, I can only leave you with one thought, that it's only the two-wheeler space that will probably see a pickup, because the competitiveness in the passenger cars is really something which is very, very intense, and there's none of the companies that could kind of very easily do well, except for maybe a Maruti with its hybrid portfolio getting to be expanded. And watch out for Mahindra. I know Surbhi will catch me for this next time, but the electric vehicle launch that they've had is still underrated, or under, fathomed by the market in terms of the potential that it has. If you take a look at the vehicle, you'll realize what I'm talking about. They could probably, grow absolutely at a scorching pace once people understand what they're offering at that price point is so powerful as a package. So I would watch out for that, but it might take some time. It's not something which will happen today or this week, but in the next quarter or two, you'll probably see a whole re-rating of sorts, only on the basis of the new launches that Mahindra has done.
That's interesting, Prakash. I think you've managed to get a closer look at the cars. Last time when we were discussing it, last week when the launch happened, you said you need to check it out for yourself. So this is interesting. Sets us up for a good conversation next time. I want to know what exactly you liked. But that's for later. By the way, that whole 6C court battle, that's also continuing. Not that it has an impact, immediate bearing on financials of the stock. That's interesting. They're in a big tussle with Indigo over the use of the brand 6C. All right, Prakash, thanks very much. You have a good day and we'll connect again soon. Right now, let's put the spotlight on the financial space. MPC, of course, that's the RBI Monetary Policy Committee, kept repo rates unchanged, but decided to cut the CRR by 50 basis points. This will free up a lot more liquidity for the banking system overall. Pranav Gundapalli, Senior Analyst, India Financials at Bernstein, is with us now. Pranav, great to have you on. So is there any sensitivity analysis or any sort of analysis around who benefits the most with this over, 1 trillion rupees that comes into the system with this 50 basis CRR cut? What are your first thoughts?
Right. So I think there are two parts of the benefits. Right? One is to the stock, which is you have banks which will see some improvement in their NIMs, maybe about 3 to 4 basis points, because you need to keep lesser amount with the central bank now. I think the second is the set is more on the flow basis, where the banks which were constrained on liquidity for their growth will stand to benefit a lot more. So in that sense, the public sector banks, which were nearing the end in terms of their excess liquidity, will probably see a bigger relief compared to the private sector banks.
Okay. That's interesting. So that's the first relation or the first order analysis, that in general, PSU banks will probably see a greater relief. They've also had a great run, Pranav. I mean, in terms of just the stock price action, right? PSU banks have really come back in a big way. Do you like any names here?
I think at this stage, they're largely, I think most of the upside is priced in. We do like SBI, but we think it's fairly valued at this stage. So you can sit there for the compounding story to play out. But from a re-rating perspective, we don't see a lot of room left. And while, yes, the CRR gives a bit more of the runway, we think the loan growth for the public sector banks will eventually be constrained by their deposit growth, where there is still a very wide gap between the public and the private sector banks on the deposit growth, which we think will flow into the loan growth as well. And when that happens, it's hard to see a re-rating in that event.
Got that. Pranav, good morning. Prashant here. In terms of your sort of coverage universe, Pranav, how would you rate what is looking very attractive, what is looking sort of out of what you wouldn't want to do anything with right now? Not just banks, but NBFCs and anything else you cover from the financial space.
Right. We find HDFC to be attractive. We think there will be an ROA improvement story, which will be counter to what most of its peers would be seeing. And given that we will see it coming back to EPS growth in somewhere in the mid-teens levels, and maybe 12 months out, loan growth also catching up to be ahead of the system, I do see a re-rating potential there, and hence that's our top pick. The ones we would stay away from at this stage is the consumer-focused NBFCs, the likes of SBI Cards, Bajaj Finance. We think we still have a couple of quarters more of pain left in terms of asset quality. Now that most of the lenders have toned down their lending in the consumer segments, we think it will have a ripple effect in terms of asset quality. we would wait for that to play out before jumping into any of these names. So that's the set we would stay out. We also like Paytm more as a way to play, apart from the longer term payment story. We think it would be one way to play a rebound in consumer lending when it happens a few quarters down, without the concerns around the asset quality front. So those would be the kind of areas we like and the ones we would stay away from.
Okay. By the way, those are some numbers coming in from FADA auto numbers. They're looking okay, 11-12% growth for the month gone by. And that's largely thanks to the fact that two-wheeler sales are holding up and SUV sales are holding up, because otherwise CVs is a painful story, as are passenger vehicles. The reason you're seeing that sharp drop on the passenger vehicle number is that it's a typical seasonal impact. Post-festive season, I mean, the demand gets bunched up between Dussehra and Diwali in most years. So immediately after that, there is a drawdown in terms of appetite and demand. We'll watch out for how these stocks behave and react. Pranav, finally, now this whole MFI business, right? And this is something that you alluded to in your post-earnings note as well. The stress is real for a lot of these entities, and some of them are being called out by rating agencies for delay in bond payments, etc. I remember Spandana Spurti, I think last week was called out. What are you factoring in as of now? A recovery in Q4 as what a lot of managements are guiding for, or could this be more painful? What's your overall stance and thesis on NBFCs, specifically consumer lending and MFI?
Right. See, I think MFI being a shorter tenure loan would typically recover faster than the consumer, the overall consumer segment. So we would expect, some sort of a recovery, or at least bottoming out of credit costs by Q4 or Q1 of FY26. That's one. I think the second is what happens in the longer term. We do expect them to get past the credit cost pain, but we do think the growth would be a lot more moderate going ahead compared to what we had in the last few years. So what we are baking in is, yes, a recovery in the first quarter of next year, but a lot slower growth and also a lower ROAs, given that there are going to be more restrictions around leveraging and what they can do in terms of their lending business. So slower growth, lower ROA will probably be the new normal, but the worst of credit cost should be over by Q4 or Q1 of next year.
Okay. All right, Pranav, we'll leave it on that note for this morning. Thank you very much for joining in. Good to have that perspective as we get ready for trade. Okay, it's 9:10. We'll go back to our technical experts and also just quickly glance at the market. About 40 points lower. That is what the Nifty is giving us at this point in time, with the Bank Nifty falling a little more, 0.25% decline on the Bank Nifty. So we've got, I think, Mitesh and Sudarshan back with us. Mitesh, 9:10 idea?
Yeah. So I'll go with the buy on L&T, looking at a target of 3930 on the upside.
Okay. Just one more stock, Mitesh, if I could throw this one at you. Godrej Consumer, because on the fundamental side, there's some negative news flow, let's see. But in terms of levels to watch, supports, what are the zones to track? Godrej Consumer.
I believe they've kind of cut their guidance, and the stock price, if you look at the last few weeks, it's declined from 1500 to about 1200, still making lower highs and lower lows. So till it gets past 1260, 1270, one, don't turn positive. Good chance that we'll retest the recent lows of 1180, 1200 zone.
Okay, 5% lower on Godrej Consumer. Let's revisit, though, in terms of news flow and that update. Sudarshan is back with us. Good morning.
Morning, Prashant. So Godrej Consumer has given the mid-quarter update, and today's stock is opening with a cut of almost 5%. And the mid-quarter update for Q3 is not looking good. Company says it's expecting flat volume growth, and on the sales front, it's expecting mid-single-digit growth. And on the demand conditions, it says demand conditions have remained subdued, and it's expecting a sharp decline even on margin. Brokerages, there are mixed views. JP Morgan has maintained overweight call and target is 1410 per share, but it has lowered the forecast for domestic revenue growth, and now it's estimating 8% standalone growth for FY25. Macquarie too has maintained outperform call, but has cut target to 1260. Also, it has cut FY25-27 EPS estimates by 3% each. Goldman Sachs maintains buy call, target is 1375. It says Q3 profit warning is a setback, but headwinds are not structural. CLSA maintains underperform call and target is cut to ₹1,000 per share. It says margin is likely to undershoot even the normal range the company had given previously. Jefferies maintains buy call target is ₹1,550 per share. It says both soaps and home insecticides likely to see volume decline in Q3, and updates given by the company are now adding to the concerns not only for Godrej Consumer but for the entire industry.
All right, so thank you very much for that. That's Godrej Consumer, and we'll watch the impact in the other stocks as well. But the Biosecure Act and the implications, Vinny is here with that. Vinny, morning.
Good morning. So yes, the Biosecure Act, now the update that is coming in is a bit negative for the Indian CDMO companies because Biosecure Act was left out of the key defense bill. So that comes in as a win for the Chinese biotech companies. And watch out for stocks like Divi's Lab, Piramal Pharma, Newland Labs, Syngene, Suvin. They're all the CDMO companies which could see an impact because of the sentiment, because as of now this bill is not approved. So there's a delay in approving that, and that is why a negative coming in for
all right, Vinny, thank you very much for that. You know, we'll sort of discuss this a little bit in detail with Vinny. We'll try and get an analyst as well, maybe a company in terms of what this means as we go along. But the first rates will come up on your screens in just a bit, and I think it's going to be slightly lower. So 0.16 lower on the Nifty, 26,644, 642. The Nifty Bank is down about 0.12, 53,424. The sensex is down about a quarter. Mid-cap index is now flipping into the green, but it's not very much, it's not doing anything at all. Absolutely flat. And of course, you've got the Nifty heat map coming up on your screen. It's got more down than up and a few unchanged as well. You know, just finish the first 1 minute. Within the first 1 minute, 43 points lower on the Nifty. So once again, like Friday, it's neither here nor there. 24,640. Let's get down to stocks.
Okay, well, let's look at some of the names that are, active. Lever is down 3% already. Actually, even before I look at the others, let's look at Godrej Consumer. 8% down. You've got your, morning accident because of that extremely weak commentary that's come through. They're saying that sales are going to be flat. Beg your pardon. Volumes are going to be flat. Margins will be under pressure. There's competitive intensity. There's raw material inflation that's causing a churn. And a lot of their global businesses are also going through, reorganization of sorts in terms of the product mix, etc. So therefore, expecting it to be a tough quarter. 8.5% lower. And now coming back to the Nifty, the rub-off is playing out on the entire consumer space. Lever 3%, Britannia 1.5%, Tata Consumer 1%, Nestle 0.5%. So there you go, the overall FMCG space under a lot of pressure this morning. Aside of that, there's profit taking on autos, Aisha, M&M. These are early names on the way down. And then a lot of the big boys are also on the lower side of the screen, at least as of now. By big boys, I mean TCS, ICICI Bank, Infosys, even ITC for that matter. So lots of red on the screen. However, pulling up the upside, L&T about 1% higher over here. SBI Life, Bajaj Finance and HDFC Bank is trying to prevent a wider decline. And then you have some names like JSW Steel also contributing. Coal India slightly higher. But yeah, it's a bit of a challenging morning. And right now it's L&T and HDFC Bank to the rescue, really, because otherwise a large part of the market is under pressure. Nigel.
Well, the market likes CEAT's acquisition. They've done it around 1.1 times EV upon sales. But I'll tell you what, I think the margins are better on that business. We'll get to the management in just a bit. So that's why that stock is the stock of the morning on the upside, up close to around 6%. The other couple of names that are buzzing around, AB Money, we don't talk about the stock too often, but volumes are pretty decent for a couple of minutes. The stock is up close to around 13%, so keep an eye out on that one. ITI is another one that's done quite well. That's moving on rather decent volumes this morning, and that in fact is one of the top volume movers in trade. Easy Trip, they have done some inorganic growth. They've done some fundraise as well, so the street likes that. The stock is higher, but keep in mind the stock has seen a sharp correction from the recent peak. Welspun Corp, that stock is another big mover today. It's up close to around 4%. In the current market scenario, that's one of the outperformers from the broader markets. Up 4% as we speak at a fresh 52-week high. We'll try to get the management in the next 1 hour or so to detail that order win, but the street clearly likes it, and that stock is flying away in trade. So a flattish start is what you'll have to see. The FMCG index is under pressure. You had investor meets at HUL as well as Colgate, and they didn't really indicate that, in fact, there was any big recovery on the ground. And now with Godrej Consumer coming in with their update ahead of their Q3 update, I think the street is a little bit nervous. So that's why that index is struggling. Prashant.
I like how you put it, Nigel. Update before the mid-quarter update,
Yes.
before the quarter result. So, update to the update. Anyway, but it is a reality check, right? Because, I mean, I think they have a real sense of how the third quarter has gone by. And we'll see. About the FMCG index is down about 1.3, 1.36 odd percent as we stand right now. So that is the overall sense. Maybe just look at the the stocks within the space. So Godrej Consumer is down 8.5%. HUL is down 3%. There is Marico, which is down 2.5%. Dabur is down 2%. Colgate is down 1 3/4, and you've got Tata Consumer and Britannia, which are down about 1.5% as well. You just have, I think, Varun Beverages, which is up, Radico, which is up, and that's it. I mean, nothing else. Everything else on the FMCG index, a part of the FMCG index, are starting lower right now. Just sort of away from FMCG, in the broader market, it's still up, more up than down. 1,700 stocks are higher, and you've got about 550 odd stocks which are lower at this point in time. The biggest volume-led gainer now is ITI. ITI is up 6.5%, and it's done well. It's done pretty well. So 2 days back, from about 280 levels, it's jumped to about 340 in 2 sessions flat. So that's a big one. I was talking about HBL Power with Prakash earlier. That's up about 3.5%, and it's got the second largest volumes for this point in the day as we start. Humongous volumes again. Friday, I think, was a decent day, and it's starting up today as well. We already mentioned CET, which has moved up a little bit more, 7.5 now. Welspun Corp, we mentioned 4% there. Look at EMS Limited. Again, one of these names which has come up nicely from about 800 levels to about 900 very quickly in two sessions, actually. That is EMS Limited. Triveni Turbines is seeing a little bit of move, 2.5% higher. There is TD Power Systems, which is making a bit of a move, 4% on this one, 453. And look at the apparel maker, Gokuldas Exports, which is coming up, which is basically, I think, a back above 1,000 rupees, 1,030 plus. And it's got decent sized volumes for this point in the day, 6.5% higher. You know, recoveries in this name have been fleeting, but the high was about 1120. And the stocks, of course, I mean, fell to about $800 or so recently, and back above 1,000 rupees right now. Axi Cage is up about 2.5. I mean, I can go down the list, more names, but volumes are lacking. So I think we'll give it some more time before we come back and circle back and look at some of these levels. PVR Inox, I mean, remember we were talking about Pushpa 2 and the impact, etc. PVR, at least for now, is starting down. I mean, nothing on it, 1.25% lower. So high last week was 1620. It's lost about $100 from there, 1530 or so at this point in time on PVR Inox. Nigel.
And maybe we'll get the PVR management as well in the next 60 minutes or so on the channel. So let's find out how business is going on that front. But the other one that we'll be talking to within the next 90 minutes is Welspun Corp, and the stock is one of the top gainers today. The reason is they've gone ahead and they've won additional orders in the United States. Keep in mind, FY25, the US business has been a bit of a drag, but now for the second half of the year and for FY26, things are looking very, very promising. They put out a release on the exchange and they won additional orders for HSAW and HFIW pipes, which are basically used for natural gas pipeline projects. They also go to say that for Q3 so far, they're back closer on 7,000 crores odd. And earlier they had won orders of around 3,700 crores. So 7,000 crores minus 3,700 crores gives you a number of around 3,300 crores, which is a potential win that they won in addition to what we saw already in October as well as in November. These projects will be executed in the next 2 fiscals. That's the second half of this year as well as FY26. Commentary as well is very, very positive. They're talking about having a dominant position. They're well placed to win more orders. And I'll tell you what. Mr. Trump's focus is on drill, baby, drill. He's talking about drilling more, making the United States more self-sufficient. If he's going to be looking at more oil as well as gas, then he's going to require pipes. And Welspun Corp has their facility in the United States. So that's why they're well placed. Explains why the stock, on a day that the market is a little bit jittery, it's still holding with a gain of more than 3%. And in fact, it's made a fresh 52-week high in today's session. Better margin business, getting a good amount of orders. The street likes it.
Okay, all right. I'm just going to, that's Welspun, up 3%. Good to see some green because I was still focused on Godrej to see if there's any recovery, and there hasn't been any. Stock's still down 9%. Let's put it up. Godrej Consumer, if we can. because it's dragging the rest of the index down with it as well, the FMCG index. Now, the issue is, what is the company saying? The company is saying that it'll see mid-single sales growth with flat volumes, and there could be a lot of pressure on the margins. Why is the company talking about this whole situation? They're saying, number one, that the home insecticides business, which contributes a third of their revenue, is adversely impacted with weather. And they're going on to say that the soaps category has been impacted because of a surge in palm oil prices. And they're saying that some of their global businesses, they're also going through a reorganization. And there could be some volume decline in some of the international markets as well. So all put together, this has led to a lot of pressure on the stock. You'd imagine that some of this would be factored in, considering it's not been a very hot year for FMCG growth. But in any case, this is fresh news and fresh talk of very clear weakness by the management, and the market's kind of reacting to that. Let's move on and look at more stocks in focus. Paytm, which is promising to sell, I think, some of the stock acquisition rights in a Japanese entity. That stock is making it to the headlines as well this morning. Abhishek.
Well, Paytm has issued a clarification on report that Paytm will sell stake in Japan's PayPay to SoftBank for a consideration of $250 million. Now, Paytm says that the board of their arm, that is 197 Communications Singapore, has approved the sale of SaaS in PayPay Corporation Japan. SaaS is nothing but stock acquisition rights. So this will be done for a consideration of 2,364 crores. The report cited about 2,111 crores. So it's an upside of 11% to the report, and transaction will be completed in December of 24. So this money will come in Q3 of FY25 for them, and it will help the consolidated cash balance of the company. Back to you.
All right, Abhishek, thank you very much for that. So that is Paytm. Stock's done, of course, phenomenally well. It was one of the few names we should not correct from the September highs. I mean, it had a very minor correction while the rest of the market pulled back about 10% or so. And it's come back into 4 digits now, $1,000 on Paytm. So that's quite something. I think it listed late 2021, a little over 2,000 rupees. And then, of course, it had a one-way sort of drop all the way down. Recent low was 350 rupees. And from there, it's had an uninterrupted move into the 4-digit mark now. Tahir Badshah is with us. He's Chief Investment Officer at Invesco Mutual Fund. Tahir, good to have you with us here. Thank you for your time. I'm sure you would have seen the Godrej Consumer mid-quarter update, Tahir. Would you take that as a sign, as a signal for what the broader sort of consumer / FMCG as a space has done in Q3, October to December? You think it's very company specific and you would go that far?
No, I would think that probably it's a combination of both. It's a reflection of the situation that we still have in the system, and we're still not fully out of the woods. And there is the other layer, which is basically the more structural layer, which is of regional competition, regional brands, and a few other things. So I think it's both these are at play at this stage. There is the cyclical factor, which is still not showing as much of strength and promise, and probably will take some more time to come through. And the other one is, like as I said, the more structural part, which is that some of the larger organized players are probably at the receiving end as far as competition is concerned. That's what it appears to be, appears to us at this stage.
Tahir, hi. Good to have you on the show. Just to expand on that point, on this whole debate around urban consumption slowing down and discretionary consumption still picking up. In your portfolios, when it comes to consumer, what are you keeping and what are you avoiding?
So we have kind of been largely revolving and centering ourselves around the consumer discretionary space. Up until now, that has been where a larger part of the weight has been concentrated. We've virtually been absent as far as the FMCG portion of the market is concerned, and within the consumer discretionary space as well, we've probably been pretty specific and choosy about what we are probably try to reflect in our portfolios. So where the execution engine is strong and the growth momentum obviously is a lot more convincing, that is where we have probably stayed put. We have looked at certain parts, value parts of the market, which could be in probably FMCG retail, or consumer retail rather, but that too is still at a very baby step kind of a level that we have probably approached as far as our portfolio is concerned. So that's pretty much how our configuration as far as the consumer portion of the portfolio is concerned.
Right. Hi, Tahir. Good morning. First of all, congratulations. I'm looking at your Invesco India Focus Fund. If I'm not mistaken, I think it's given returns of 45 to 50% in the last 1 year. Wow. That's
Thanks very
looking
much for
quite
that.
good. So congratulations to you, and good to see you are making a lot of money for your investors. But what about 2025? It appears to be far more challenging, and we've had a good run of late. Money making is going to be rather difficult. Which is your top theme you're betting on for 2025?
Yeah, it's not going to be easy. I mean, we are cognizant of that. We also have obviously, in our own minds, leave alone our investors and partners, we have moderated our return expectations as we get into 2025. Pockets are somewhat narrower compared to what of opportunities compared to what we were probably seeing in the last 2 odd years. But at the same time, it is also not a situation where we find it very difficult to ideate. I've said this a number of times in the past as well, that we do come across parts of the market which do turn into some relative value. So we've seen correction along the way in the last um, couple of months, as you know, and certain pockets have corrected pretty well. Some stocks are even down 25-30% or even more from their peaks. And they are, giving us some ability to think through in terms of their valuations. Maybe some of the public sector units have also corrected. Some of the defense stocks, for example, have also come off quite significantly. So I think we continue to be on a watch. We try to keep to a good balance between the portfolio from a perspective of growth as well as value, and it might probably this 2025 might call for a little more rotation compared to what it has been in the past. But at this stage of the market cycle, we believe that it is best to kind of diversify portfolios as much as possible. So even in you mentioned the Focus 20, and even in that portfolio, despite the fact that we are only we can do not more than 20 stocks, so we're maintaining adequate diversity. Whether it be with regard to sector exposure, growth versus value exposure, or whether it be, even sector exposure for that matter, and thematic exposure too has been, as well as market cap diversity in terms of large cap, mid cap, small cap. So I think we are trying to that's going to be the formula as far as generating returns in 2025 is concerned. But the key mantra, which is basically about bottom-up stock picking, that is evergreen, and that will probably continue in every kind of market cycle. You'll have to find winners, and we'll continue to probably try and attempt that with the help of our investment process.
Okay, all right, Tahir, we thank you for joining in and filling us in with all of those details. Wishing you a good day, and we look forward to chatting up with you either towards the end of this year or in the next calendar year. Well, let's focus on CEAT. That's the stock that's buzzing in trade, one of the outperformers post that acquisition that they've done. They'll acquire Camso's off-highway tires and tracks business from Michelin for around $225 million. To discuss details of this acquisition growth outlook as well, we're joined by Anand Goenka, the Vice Chairman at CEAT. Hi, Mr. Goenka. Good morning, and thanks a lot for joining in. Well, congratulations. The street likes what they are seeing with regard to this acquisition. It appears on an EV upon sales, you've done it at around 1.1 times. Could you tell us what is the growth that you're anticipating from this asset that you all have acquired? And also, I believe that margins are relatively better for this acquired asset. Could you tell us what is the margins for the past year, and how do you see this business scaling up?
Yep, great. No, thank you for having me. And we are very excited about the acquisition. I think the most exciting thing about the acquisition is the brand. I mean, in today's world, getting access to high quality premium brands is a rarity. Getting customer access in EU and US, particularly with high quality OEMs, high quality tractor manufacturers, compact construction makers, and distributors gives us a great entry and stronger position in these markets. We get access to about 40 plus OEMs, and we get access to about 200 plus distributors, and this is at the high-end premium segment of the market. So to us, this is what is most exciting. Also, the OHT segment is generally higher margin than the routine tires business of passenger car and truck, etc. So this will increase our share in the higher segment business. A large part of this business is into tracks. Now, tracks are these conveyor belts that are used in construction equipment or in agricultural equipment, and it is high tech. So in addition to a brand and customer access, we get great quality technology where the number of players in the world are very few. So we're excited about growing the tracks business globally as well. And the synergies out of this acquisition, we feel, are fairly high. Whether it is, for example, once we acquire the Camso brand, we will have CEAT that can sell tracks over time. We can have CEAT entering more and more into the compact construction tire business as well. And Camso, as we acquire the brand in about 3 years' time, we will get access to all categories. We can enter into agricultural tires, power sports, and many more spaces which Camso can expand in the premium end of the market. We also get access to 2 high-tech factories in Sri Lanka, and of course the markets of North America and Europe. So overall, that's the construct, and that's what really excites us. I think the growth of both getting together, really the idea of 1 + 1 equaling 3, is very much possible.
Anand, hi, good morning. Prashant here, and congratulations. We have the last year's number, as my colleague earlier put it to you. Could you give us a sense of what kind of growth rate can we expect over the next many years? And what does it do for the overall CEAT margin profile? If you can give us broad numbers, say FY26 or FY27.
Right. So from FY23 to FY24, the OEM segment has seen some amount of slowdown. So to that extent, we expect this year to be slow. That is current year FY24. Going on to, we get access to the company after all the permissions, competition commission and all of those permissions are through, which will happen in about 6 months' time. Post that, I would say another 3-4 months of, at least 3-4 months of integration, etc. And then we can really start leveraging both the brands. So I'd say the larger effects will come in from calendar year 26, say, and with that, I think the industry itself is growing at about, say, between 5 and 7%. If we are able to get the 2 companies together and integrated well, I think we should see higher growth than that going forward. In terms of margin, the margin profile of the business is at about 15 to 20% range. In CEAT itself, we are at about 11-12% margins. So to that extent, if you were to look at the numbers, about 2,000 crore revenues coming in on a 12,000 crore base. So some uptick on margins is something that can be expected.
Anand, hi. So just some follow-up questions on exactly that. Like you said, the acquisition, the integration is going to take up to a year, right? You'll get the approvals, and then the final sort of synergies will start playing out. So we're looking at a 1-year timeline before the benefits start coming in. So my question, let's divide that into 2 parts. The outlook till the acquisition is complete and integrated, and then post. Now, as of now, FY25, there was some pressure on the margins, in the second quarter. Then you did take some price hikes. I think 1st of October, there was some price hikes. So right now, I'm not talking about the acquisition, just talking about the base business. In the second half, what's the outlook? Will you look at pushing forward more price hikes? We're just looking at the PV as well as CV numbers. FADA just put out the numbers. And CV in particular is hurting really bad, at least as of now, the domestic demand here. So your outlook on the business, FY25, first, the base business, and then we'll talk about the blended margin trajectory with this acquisition in the fold.
Right. So about 60% of our revenues come from the replacement market, about 20% from exports and 20% from OEMs. So yes, the OEM segment for us in the CV as well as in the passenger car segment are slower. On the other hand, tractors, two-wheelers are seeing a better growth in terms of the market. Overall, going forward, I think growth will continue to be strong for CEAT because of the positive momentum we are seeing in the replacement segment. In terms of margin, yes, Q3, there will continue to be some stress on the margins. Rubber prices went up from about 150, 160 rupees per kg to about 250 kind of levels about 2 months ago. This has cooled down, and at the same time, we've taken some price increases in October and November. So with some of that, we think by Q4, margins should get better. And then the year after that, things should continue to remain fairly positive.
So when you say better, now I'm talking full year outlook FY25, because you're expecting some improvement in Q4. You'll end the year at what, 12%, more than that, less than that? Just a rough band will help. And also just the revenue growth because of the strong replacement demand. What will be the revenue growth for this year and the margin band for this year?
Yeah, so to share with you revenue growth, until the first half of the year, or say Q2 year-on-year, was at about 11%. I think this kind of growth levels will be at a similar kind of a range bound. Similarly, margins, I think there will be some dip and some increase. So not much difference in what we've seen in terms of margin, maybe a slight dip from what we're seeing from current levels, say H1, H2, maybe just marginally lower, but very, very close, both of them, growth and margin.
Right. Hi, Anant. Just to get back to the acquisition, then we have got it that it's margin accretive. The ROEs of the acquired business as well, similar to what you're doing currently, 14-15%, if you could confirm that. And also, how do you funding this? It's $225 million, which is roughly around 1,900 crores or thereabouts. So what is the breakup, debt and equity, if you could break that up for us?
Yeah, we're looking at about maybe 30% from equity, 70% from debt in terms of how we plan to fund the acquisition. So your first question, could you repeat that?
The ROEs will be, around 14-15% of the acquired business?
Yes, our ROEs would be close to around 15% kind of levels. That's largely because what we're seeing is that the amount we have paid would be similar to setting up a new factory. But along with that, we get access to so much more technology, speed of entry into market, brand, etc. And the margins are fairly strong in this category. So we feel fairly positive and excited about stronger growth and returns for this segment.
Anant, there's, Trump takes over in the US. You mentioned those two factories in Sri Lanka. The push is to make in America. You think that will make a difference at all? Any risks there?
I think it could be a positive opportunity. I'm not sure if Sri Lanka is in Trump's radar. So to that extent, if he's going to look at the larger fish like China, possibly, I think it's a good opportunity for India, which has a great relationship with the US at this time, and Sri Lanka, which may be just too small at this point of time to be something in terms of taking action on. So I'm still positive about US impact being more positive than negative.
And Anant, final question, just going back to that margin trajectory in the future. Like you said, once the acquisition is done, and this is an entity that is working at higher margins, the track business, etc., 15-20%. So blended margins for CEAT, say FY27 onwards, what's going to be your aspiration band with this in the fold?
That's very difficult to predict so far on. I mean, I'd say 1 year hence.
But realistic assumption and aspiration, because this is a higher margin business that you've acquired.
Yes, largely I would say that 25% of our business will be in the off-highway tire segment. This segment does garner strong margins of around, it could be as high as 20% kind of levels. So the goal will be just to increase our share of business over time in off-highway tire segment. We feel that there's enough upside to grow in the current facilities that we are acquiring. Nearly 30 to 35% higher growth can come in without investing in more capacity. So to that extent, the growth opportunity very much is there. And the whole focus will be how do we further grow it, which will shift the margin profile. So today, if we're at say 12% kind of margins for CEAT, hopefully something higher than that. Very difficult to give a number.
Okay, Anant, very quickly, you did around, this acquired business did around $210 million in the past year. It could scale closer, it could scale much higher from here. The potential of this acquired business could be around 280 to 300 million without putting any further capex. Would that be the broad understanding?
I'd say in the near term, there has been a dip from 210. FY24, or current year 24 calendar year, we expect it to drop. But then in the long term, we expect it to certainly cross the 200 million mark over time. 200 or even go up.
I want to understand, Anant, I'm trying to understand what is the potential, the revenue potential. In near term, there are some headwinds, but what is the potential of this business if you don't have to put any further capex? What could it roughly be? And also, you briefly mentioned about equity 30%. Will you be looking at raising some equity in the, in CEAT, which would be roughly around 500-600 crores?
Right. So the potential clearly is a 250 million plus kind of number.
Got it.
And in terms of equity, we don't plan to raise. We feel our balance sheet is fairly strong. We will be in our ratios of debt equity, debt EBITDA, we'll be within fairly comfortable numbers even after the acquisition.
All right, Anand, we'll leave it there. Thank you very much for joining us. It's a pleasure and good luck. As we said, market, of course, likes what you've done. 7% in the CEAT stock is the biggest mover, a meaningful volume-led mover coming through at this point in time. We are back with the management of Union Bank for a quick chat on the impact of the CRR cut by the RBI MPC. We'll also discuss outlook for H2 FY25. Stay tuned.
Let's put the spotlight on the banking space now. RBI cut the cash reserve ratio for banks by 50 basis points last Friday. Well, how does this impact the system and individual lenders? Let's put that question to Mr. at Union Bank. Mr. Rudra, great to have you on. So 1.1 trillion, good 1 trillion being released into the banking system. What does this mean for Union Bank per se? In terms of the relief, in terms of the liquidity, what will it mean for your margins? Can there be some improvement?
Yeah, this is a very good move. Actually, the right time this has been done because all the banks are facing the liquidity issue because of the FX outflow which has happened in the past 2 months. So basically, it will release as 1.1 lakh crore will be released in the market. Union Bank will also be the beneficiary of this CRR cut. But this is very temporary because almost $25 billion has outflow of the Forex and 1.16 crore will offset some of the outflow. But basically, the liquidity position will continue to be the tightened position. And Union Bank, specifically for Union Bank, it will benefit from this, especially on the cost of deposit. It will come down by almost 3 to 4 basis point, which we expect that 3 to 4 basis point cost will come down over a period of time. And it will improve slightly, also improve the NIM. NIM may not improve immediately.
Yeah, we can hear you, sir. I think the line has just dropped. We'll just try and patch him again. In the meantime, just to kind of jog our memory, it was a tough quarter for Union Bank. That pressure on margins was quite telling because their NIMs had slipped below 3%. Now, that's exactly the point that he was making, that though the cost of deposits will come down by 3-4 basis points, will it really have any meaningful impact on NIMs until and unless we start getting the repo rate cuts? I think we'll try and ask the guest that.
Yeah, I just want to use that time to just highlight what's happening with Sundaram Finance. Sundaram Finance, nowhere in the mix in the morning when we looked at it, it's up 6%. That's a large name with a big gain. 4,400 now on Sundaram Finance, up on your screen there. And look at all financials. JM Financial is another one. And that is up about 5.5%, 147 on JM Financial. HEG is up 4%, 5.5%. So, from the recent highs, it had an overthrow above 600, 620 or so was the high. It's back at 590 after dipping to about 550 or so. That is on Friday. So it's back almost back to about $600. And more stuff. Infa, I think we've been talking about this one, 4.5%, 978. It's at a new high, Infa. And so many more names which are coming in, doing their own thing. But these are stocks which have got decent-sized volumes. ITI is still big gains, big volumes. And we're talking about PSU telecom sort of proxy names. Look at MTNL as well, which has got large volumes at this point. And it's up about 6.5% as well. So just two other names. 2:1 in terms of overall market breadth, advances to decline ratio. So it's looking good. Godrej Consumer Products and FMCG, two names, two pockets we highlighted with our team earlier, the FMCG names and the sort of CDMO and pharma names. As a pack, these are the two areas which are maximum under pressure at this point in time. Newland is down 8% now, Newland Laboratories. It's had a fantastic, I think it's up 2.5, 3 times this year. But this morning it's down about 8% or so. And of course, Divi's is down, Loris is down 4%, Biocon is down 2.5%. So Piramal is down about 2.5%. These are all names we highlighted with Vinny earlier in the morning. So just some stuff. Niva Bupa had a fantastic last 1 week, right? I mean, 5 days, it just went up quite a bit. And that is seeing a bit of a pullback as well, 3 and 3.5% lower at this point on this one. So 20 points, all of it sort of combined on the Nifty, 24,655 is where we are at. Guys.
Okay, well, that's the market, at least as of now. We'll try and get our Union Bank guest back on. I don't know if do we have him on the phone line?
Yeah,
no, not as yet. But CEAT is flying. I mean, 8%. The market's like that. Commentary is recapping it for the benefit of viewers. Let's pull CEAT back up. CEAT is basically saying that the sales dipped a little to below 200 million, but they can be scaled up back to above 200, in fact, 250 million. And the business that they've acquired from Michelin, that works at 15 to 20% margin. CEAT is working at 11 to 12% margin. And once the integration is done, the blended margin profile for CEAT should also get better.
Just one more, Senco Gold, we had highlighted earlier today, that it's seen close to 26-27% correction from the recent peak. Gold prices are okay, festive demand is fairly okay. And it's been seeing delivery-based buying. So that one, in fact, is up at the high point of the day as we speak.
Absolutely. And, the jewelers, it's been a boom time.
PN Gadgil, yeah.
PN Gadgil is the cheaper one. And of course, this one is 100 times, I think, Senco. In terms of valuations. Well, Tata Power is the stock in focus. The company set a revenue target in excess of 1 lakh crore by 530. To know more about their ambitious plans, my colleague Vivek caught up with the company's MD and CEO, Praveer Sinha. Began by asking Mr. Sinha about the targets set last year to double revenue, EBITDA and PAT from FY23 levels. He quizzed him to understand if there has been a rollover of expansion of those targets for FY30. Listen in.
We have shared the plans for 2030, and as you know, the revenue of such companies is dependent on what is the cost of raw material, in our case mostly coal, and also this cost of modules. Those have come down, so our revenue target remains more than 1 lakh crores in 2030. Of course, our EBITDA and PAT have improved, and our PAT last year was 4,200. We are looking at 10,000 plus in 2030. So, huge ambitious target that we have set for ourselves. And, we always calibrate our performance to ensure that it's not just about the numbers, but also the quality of numbers which are there in terms of better margins and better returns for our shareholders. So I think you will continue to see excellent performance from Tata Power. Very strong foundation, very strong fundamentals, and I think we are geared up for bigger things.
So over 1 lakh crore of top line expected by FY30, almost 10.5% PAT margins what you're anticipating. That's going to entail a lot of capex. Could you give us a year-wise breakup of capex? This year you have very ambitious plans, and we are assuming that majority of the capex will go towards renewable capacity addition.
So this year we are spending about 21,000 crores of capex. We also expect that going forward we'll have an average of about 25,000 crores of capex every year. Nearly 50 to 60% of our capex will go to renewable area, which is large utility scale, and some of the manufacturing that we have done, as also some of the group captive projects. We also expect that our transmission business will expand the capacity. Our distribution business, we will have capex. Apart from the existing distribution, we are looking at distribution in few more states. And also our hydro investments, so whether it is the pumped hydro in India, in Lonavala, both Bhivpuri and Shirota, or our investment in Bhutan hydro projects, where we will be an equity investor. So I think we have a very balanced portfolio of investment, and we expect that they will continue to give us very good yields and returns over a period of time.
So like all of us, I'm sure you're also looking at the equity markets, and especially some of the names, with very similar facilities in terms, as well as capacities in terms of solar cell and solar modules. They're enjoying very strong market capitalization. Would you be tempted to go for an IPO for this particular part of the business, the module as well as cell manufacturing, and especially given the fact that a lot of the companies are now talking about value unlocking in this particular space?
So we are already a listed company. Many of them were not listed companies. So our value is already there in our existing portfolio, and the value for whether it is for the renewable business or thermal T&D. So it's already part of our valuation, and I am sure the market will give weightage to the investment and to the operation of this plant. We feel that we will be able to get the right value because many of the investments that we have done have started now showing results. So we are very confident about this.
We've been tracking your company for a while, and last time you spoke to us, solar EPC order book in excess of 15,000 crore, majority dominated by in-house plants. Given the fact that players are now enjoying much higher margins, would you be looking at doing third-party EPC, and also any export plans on the horizon, given that US margins are much better?
So at this stage, we have some third-party projects. It is right now 60-40, 60% is internal and 40% is external. Going forward, it will remain more or less on the same track because we are again very conscious that in third-party EPC, our margins have to be protected, and many of the times the unknown is very high. So that's why we will ensure that our returns are guaranteed. And for that, a balanced mix of internal, external projects will be good. We also will now be working a lot on a rooftop, where we are already having a 13% market share. We're looking for 20% plus market share. From last year revenue of nearly 1,700 crores, we are looking to cross 10,000 crores by 2030. So that's a substantial increase in our revenue and returns on that. So I think we are fully committed to supply within the country. Most of the supplies from the plant will be within the country. If at all there is some good opportunity outside, small quantity may get exported, but majority will be used within the country.
We just want to talk about the discom business as well. Delhi, you've been doing it for almost 25 years. Odisha has been a very good turnaround. Privatization of discom, something that the government has spoken. You mentioned about 2 states, Rajasthan and UP. How serious are you, and what is the kind of visibility you see from privatization of discoms?
So I think many of the states are in discussion, and I expect that both the Rajasthan and UP will go through the discom PPP process, and we'll play a substantial role in that. We have the core competence, we have the people who can run this type of business, and we'll be one of the major players in this area.
Lastly, sir, anything as far as long-term PPA agreement as far as Mundra is concerned? Are you still in talks with various state governments?
Yes, we are in discussion with the state governments, and we should be able to close it quickly.
Any timelines that, because now you have visibility for 5 more years, right?
Yeah, absolutely. We definitely would like to close ASAP. But, there are 5 procurers, and you need to get everyone on the table together and build a consensus. So we are in discussion with them. Hopefully, we'll be able to do it much faster.
Okay, well, that's my colleague Vivek Iyer in conversation with Mr. Praveer Sinha of Tata Power. Interesting chat there. Stocks up about 1%. More highlights from the CNBC-TV18 20th India Business Leaders Awards. Mr. KP Singh, the chairman and CEO of DLF, was inducted into the Hall of Fame at IBLA 2024. He created a strong pitch for job creation at the event. Listen in.
India is a country rich of heritage, north, south, east, west. Perhaps like it doesn't exist anywhere in the world. So why not 100 million? Why not 100 million, sir? Earlier, people could say, oh, road network is very difficult. Gadkari ji did it. Therefore, I believe things like this thing, which can create jobs. Take housing. As India grows, you need more housing for every section of the economy. So things like this, wherever jobs can be created, should be the mantra and the priority of the government. Not only government, you all. And please trust me. If you do this, it'll be a balanced growth.
All right, that was Mr. KP Singh at the India Business Leader Awards. But let's come back to the FMCG space. The FMCG index is now down 2%. And the fall is no longer restricted just to Godrej. Right from the start, a lot of other names have been under pressure. Lever, for instance, is down 3.5%. Tata Consumer is down about 3.5% as well. So it's this commentary is really shaking up the overall sector. Let's go across to Mangalam to understand really what's happened. Mangalam, there are mid-quarter updates and then there are mid-quarter updates. This one's an absolute howler.
Well, usually there aren't mid-quarter updates in Godrej Consumer. The fact that there was a mid-quarter update and that not a positive one has the street worried, especially because it's the second half where, the street believes that things look a lot better, at least on the demand front. Godrej Consumer, the second consecutive quarter of weakness is what the street does not like, and as a result of which we are seeing an impact on all the other companies, though a direct business impact is most likely on HUL, whereas the others is just a lot more sentimental. So for Godrej itself, flat volumes and mid-single-digit sales growth expected is a lot lower than the company's own target aspiration of double-digit volumes. In fact, they were expecting high single-digit volumes in the second half of this year itself. It's the soap portfolio which has been impacted by price hikes, grammage reductions due to 20 to 30% surge in palm oil prices. We knew about this. The company had guided, but now that it's impacting numbers is something that the street is waking up to. And then, delayed winter impacting their household insecticides portfolio as well is something that has, worried Godrej Consumer itself. With demand conditions being subdued, there would be unusually high decline on margins as well because one, the base last quarter was extremely high, and secondly, there is inflation, competition and investment that the company is doing in marketing. Remember, last 5 quarters on an organic basis, the revenue, the volumes have grown at 7%, so it's sitting on a high base. And on an inorganic basis, including Raymond's business as well, it's in double digits. So those are a couple of things that we'll be watching out for, because after the second quarter, the company had said that they will be happy with high single-digit volume in the second half. Seems like it may not come by, and they operate in 25 to 27% margin band for India. There will be further downside for the next few quarters is something that the street was prepared for. What is the impact on HUL? Remember, HUL's volume growth has not been as high as Godrej Consumer in the soaps business. So that tells you that there might not be as much impact on HUL because of the inventory, but definitely their personal care business saw a decline of 5% in revenues. Margins came off as well. Management did say that they are expecting low single-digit price growth and EBITDA will be maintained at current levels. But this was before the update came by and after the second quarter. Could there be a downside on HUL's margins as well? It's something that we'll definitely watch out for. All the other FMCG stocks lower because of two factors. One, demand hasn't improved, and secondly, an important component, which is palm oil prices, have seen that 20 to 30% rise. So what could their impact be on their numbers is something we'll watch out for.
Mangalam, thank you very much for that. That's FMCG in focus. Well, let's talk about the other pack, which is impacted as a whole. That's pharma and CDMO names. And Vinny is back with us to shine the spotlight on these names. Vinny, morning.
Good morning. So yes, we've seen all these names under pressure, whether you look at a Divi's Lab, Newland, Piramal Pharma under pressure today. Why? Because now the US Biosecure Act, that was actually dropped out of the US Defense Bill. So that's some bit of a delay, because what Biosecure Act was going to do was that for Chinese biotech company, there would be restrictions that would be involved from US's side, and that would in turn benefit the Indian CDMO businesses, CDRO businesses. Now that comes in as an impact because there's a bit of a delay in terms of the approval coming in for this act. And that is why these CDMO businesses are seeing a bit of an impact today in terms of trade. So keeping an eye out on all these stocks today, because now this could maybe be passed on. If it doesn't get cleared by the end of 2024, then there's a whole new process that starts in 2025 for this approval to come in. So we will be keeping an eye out on these stocks today.
Okay, all right, got it. Thank you, Vinny, very much for those details. Vinny, also before you go, RITES, what's the buzz here?
So RITES, a good move that we're seeing coming in, and in the last couple of days, we've seen a lot of order wins coming in. Now, this is the recent order win that they have won from the Guyana government over there. Now the order value for this is around $9.71 million. They have been awarded for Ministry of Public Works over there, and just on 5th of December they had won a big order in India as well from IIM Raipur for 148 crores. So two big order wins in the recent days, and the stock has been buzzing in the last couple of trading sessions.
Right, Vinny, thank you very much for that. We'll take a quick commercial break here with news that there's not very much to okay, the Nifty is down 60 points. I think there is a bit of a move now which is starting to develop. and we are at the low point of the day now. I mean, another leg lower has essentially led us to this 60-odd point drop now.
It's all consumer, Prashant. I mean, now look at, for instance, even a Tata Consumer or a Trend. It started with, like Mangalam is saying, Godrej Consumer and HUL, but I think it's just risk-off in general on the consumer side.
Yeah, most of these names are down between 3. Godrej Consumer down almost 10. The others are down between 3 and 4.5%. Quick break. We'll get you some more trades with Mitesh on the other side. Stay tuned. Coming up.
The next category of the evening is Outstanding Company of the Year. Ladies and gentlemen, a huge round of applause for Mr. Rajiv Bajaj.
Welcome back. Now it's about a 70-point drop, 70 to 75-point drop on the Nifty. So it's turned out to be a weak start. Let's see if the bulls can recover, because the thing is that, nothing seems to be working on the large cap screen right now. FMCG is a weak story anyway, but banks aren't performing today. A lot of the IT stocks are now slipping to the red side of the screen. So you don't have too many firefighters on the way up. There's only an L&T and an HDFC Bank. They're the lone rangers, so to speak. We've got Mitesh back with us. Mitesh, how would you navigate this early weakness coming through?
As I said in the morning, I think this is a market which is still looking like ranging and consolidating at higher levels. We have had a good rally from 23,300 to about 24,800 odd levels. I think now the hourly charts are showing a sign of pause. So we could do a range of about 24,800 to about 24,500. So my buying zone is around 24,540 thereabouts. So maybe another 70, 80 points lower, you would want to explore index buying. But yeah, actually it's happening in individual stocks, and that's the way we are approaching it. So waiting on the index and wanting to buy stocks stocks right now. I have a buy on Container Corporation of Concord, which I would recommend buying with a stop at about 845 for targets of 880. And the other one is Crompton, which also has reversed today. That's a buy with a stop at 406 for targets of 425.
All right. Mitesh, thank you very much for that. Those are individual trades from Mitesh which are coming through. I think market is down almost 80, 24,600 or so is where we are at right now, at the low point of the day. We'll take a break. On the other side, it's our segments, Market Masters. Latha will be in conversation with Timothy Moore of Goldman Sachs, and they talk about outlook for India, equities, rates, and of course India's place in a Trump world in 2025. That's coming up in just a bit.
The Disruptor of the Year award highlights innovations that reshape how businesses operate and how consumers engage with them. Now this year the award goes to Blinkit, requesting Mr. Albinder Dhinsa, co-founder of Blinkit, to join us on stage.
Congratulations to Team Blinkit.